Hello, good afternoon. You've tuned into Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in, as always. Markets as of now, again, we're seeing that flip-flopping between the red and the green. So right now, the Nifty is trading a bit on the red, just slightly below the 25,000 mark. Will be important to watch out for where it's going to be headed in the next couple of hours. But as of now, down 0.2% is what the Nifty is trading at. Sensex 2 is down 0.2%. Day's lowest point is what the Sensex and the Nifty are trading at. So not much of a strength that we're seeing coming in. Other than that, the mid and the small cap, the outperformance, that is what is continuing on the broader end of the market. Last week also we saw it. Today also the outperformance continues for the broader end of the market. IT, top sectoral loser, so keep an eye out on the IT pack, or whether you look at a TCS, Infosys, all these big IT companies are also under pressure today. On the flip side, we have Realty as well as Pharma that is managing to hold on to gains. So they are the top sectoral gainers on that front. And we have a lot of pharma names that are doing well, like DV is on the back of its numbers. Capital Point came out with its numbers last week as well. And that is what is managing to hold on to gains. But this is a show where we solve all your stock-related queries, and that is what we'll be doing in the next 20 minutes or so. We have our experts joining in with us, Ruchit Jain, Vice President, Equity Technical Research, Wealth Management at Motilal Oswal Financial Services, as well as Parthiv, Shah, Director at Tracom Stock Brokers, joining in with us to just do that. Ruchit as well as Parthiv, thank you so much as always for joining in with us. And Ruchit, just a quick check in terms of the markets for the Nifty as well as the Bank Nifty. What are the levels that we are keeping an eye out on? And if we close below 25,000 today, is that a bit of a worry for the markets?
Yeah, hi, very good afternoon. Well, if we look at the lower time frame charts, then we do have about a negative crossover in the RSI, which indicates probability of some pullback move in the Nifty. But the daily and the weekly charts are still positive, and we have seen that in last few trading sessions, the market breadth has been very good. Considering that the mid caps, especially the mid caps and the small caps, have been showing an outperformance. So, whenever such situations arrive with the lower time frame charts indicating some corrective phase, then we usually get a pullback move within an uptrend. So I think all the broader trend remains positive. We could see some pullback in the Nifty towards 24,800, 24,700 kind of range. But this remains a buy on dip market, and in case if we get any dips towards the support zone, one should use that as a buying opportunity.
Okay, that's the view coming in on the markets of there. But let's get started with the queries then. The first query for today is coming in from Savan Kumar, who's writing to us from Bangalore. He's asking if it is a good time to enter Zen Technologies, and he's asking what level should he enter at. Firstly on the fundamentals, Parthiv, your view for Zen Technologies. And actually, all these defense companies have seen the run-up, right, in the recent time as well. They were already trading at higher valuations. After the run-up also, they become a bit more expensive. Do you think it merits entering any of these defense names, and specifically Zen Technologies?
Good afternoon, Ruchit and our viewers. It's a very interesting company, Zen Technologies. And no doubt, I think recently, due to the geopolitical issues, I think we have seen most of the defense names, I think, go up even after the war. So more importantly, I think this company is into a lot of drone-related aerial warfare, where they make simulators, and I think that is the future. And we did witness in the recent wars how much of importance the drone has played. The company has a very strong liquidity position of almost 1,000 crores, and they have very good order intake, and they maintain a very good, healthy working capital cycle. More importantly, I think they recently also acquired some strategic assets, where they acquired a company which is into component manufacturing for different systems, and also they acquired a company in the robotic system, which is more dedicated towards the defense-related products. So I think very interesting things the company is doing, and no doubt on a trade basis, the company is very expensive at around 60 trade multiple. But our sense is that this company has very good ingredients to grow in the long term. They've shown very good healthy growth, and probably that's why the market is rewarding it richly. But I would suggest the viewer to stay on the sideline, not immediately jump the gun and buy at these elevated valuations. Whenever we see market correction, even the defense pack tends to correct. That is where I think if with a better entry point of 1,500, 1,600 zones, if he's able to enter Zen Technologies, I think that would be a better prudent level for long term.
Okay, right now don't jump into entering it. Maybe when you see that some bit of a correction coming in for Zen Technologies, that's when you can enter. But otherwise, the company on the fundamental side is doing well. And, it's an interesting company right now is what Parthiv is highlighting. Ruchit, on the technicals, what is your view coming in? 7 consecutive days of upper circuit, right, for Zen Technologies. There's no stopping it right now, it seems like it. So what should one be doing?
I have a similar view that the overall structure for many of these defense space looks quite positive, considering that the recent price volume action have been such we usually see on a good trended up move. So I believe that if in mid to long term these companies would deliver very good returns. Zen Technologies technically has recently given a breakout above 1550, 1600, which was its 200 DMA resistance. So I think on any dip now that 1550, 1600 would become a support zone. So buy on dip should be a strategy in case if we get any kind of decline in the near future. I think some other defense names such as Bharat Electronics, Solar Industries are also looking quite positive. But again, as I said, the stocks have already seen a good up move or run up in the last few days. So one should keep a buy and dip strategy in these stocks.
Okay, keep an eye out on those levels over there for Zen Technologies. Maybe wait a bit, maybe for the correction. But let's move on to the next query for today. We have the next query on AB Capital and AB Fashion. We have Gautam, who's writing to us from Mumbai, and this is with an investment query. So he's asking for both these Aditya Birla Capital as well as Aditya Birla Fashion and Retail. Should they look to enter the stock? What is the view coming in for the next 6 to 8 months? So I don't think it's a long-term story that they're waiting out for. But in the next year, maybe if they're looking to hold, does it merit entering the stock right now? Parthiv, your view on both these?
Very frankly, I think both these companies from the Kumar Mangalam Birla stable have been like lackluster for creating shareholder wealth. Firstly, if I have to start with ABFRL, I think we know that there is a demerger in this company where Madura Garments, which houses a lot of brands, which are very good, healthy, cash flow generating brands, and which have been supporting the lifestyle business, which has been draining cash for the company. I think that is why probably the market was a little excited in terms of the demerger move, which will give investors chance to play the pure cash generating brands. But our sense is that, I think it will take some time. And more importantly, looking at the current consumption theme, I think, and also looking at the past few quarterly numbers for ABFRL, I think things have not really looked up well. And more importantly, there are other counters, other peers who have been taking a lot of market share from this play. So I think I would suggest an avoid, won't suggest an entry at ABFRL. Talking about AB Capital, again, ever since this company was demerged, I think it has not created any value. I somehow recollect that it was demerged at a levels of 250 bucks, and this is maybe upwards of last 7, 8 years. And the company is quoting at around 200 bucks. A lot of times, the management has guided that they are trying to restructure the NBFC book and trying to clean up things. But I think somehow it's failed to deliver value, despite the fact that it is also a holding company and holds other financial services assets like the insurance play, like even the AMC play. So again, this is a counter I would suggest to avoid.
Okay, so both these names right now is something you would suggest to avoid as of now. Ruchit, on the technicals, does it merit entering the stock? Because they're looking at just around a year of holding, not more than that. So, is there anything of a short bounce that one could expect in the next 6 months, 8 months time?
So I think ABFRL would continue to consolidate within the range. In last, I think 1.5 years, we have not seen any kind of trended phase coming in the stocks. But yes, off late, some recovery signs have been there in AB Capital, where price up moves have been supported by good volumes. A high top, high bottom structure is there. On the high side, the previous swing highs were around 245 kind of level. So I think in a pullback move, towards 245, 250 could be expected. So ABFRL does not look much positive, but AB Capital, in case of any dip towards the 200, 205 mark, can be bought for potential targets around 245.
Okay. So ABFRL, avoid coming in from both our experts. Technical front, maybe AB Capital, keep an eye out on those levels Ruchit mentioned where you can look to enter as well. And 245 is maybe where you can book your profit. So keep an eye out on that. Let's move on to the next query for today. We have S. Jaykumar, who's writing to us from Tamil Nadu. He's holding 1,000 shares of Reliance Infra. Price is 266 rupees per share. Currently, the stock is trading at 279. He's asking if he can hold the shares for the long term. Reliance Infra, part of your view on the fundamentals, what is the outlook for the company?
I think it's a very difficult call, and probably the gentleman who's interested in this counter would be aware of the risk that this company and this group brings. Because I think the past hasn't been very good, but of late, there's a lot of chatter and a lot of ground level work done in terms of trying to clean up the company. And what you have seen is that there has been substantial reduction in debt, substantial reduction in a lot of liabilities, and they certainly have some very good assets. Case in point being something like BSES, the transmission distribution asset. I think that can be valued at almost the current market cap of this company at which it is available. It has some very good road assets, some EPC contracts, and even in the infra space, they have this track record of managing airports and metro. Even in defense, I think they have some good joint ventures, though the execution has been at a very snail's pace, and also a lot of offset clause that they get along with the Dassault Aviation. So our sense is that there is value. It will all depend upon how well the company executes. So strictly, I think it's a company for somebody who understands risk and takes some high risk appetite. But if the company is able to execute all the business parts well, I think then a lot of value can be created from them.
Okay. That's a view coming in on the fundamental side. But on the technicals, Reliance Infra, what's the view? Because the stock has run up, right? In the last 1 year, I'm seeing around 60-65% uptick. So does it merit entering right now? If fundamentals are fine, technically, what is it looking like?
Really, it seems that the stock is still into that consolidation phase of 300 to 220, where it is traded within this broad range since last 4 to 5 months. And if you look at the volumes, the kind of move that the broader markets have shown in last 1.5 months, we have not seen any kind of volume-based buying as of now coming in Reliance Infrastructure. So I would suggest to wait for some more time, maybe a breakout above 300, or in case of any kind of good volumes coming along with the price up move, then those could be the signs of start of a new uptrend. But for now, it seems that the stock would continue to see some consolidation.
Okay. Maybe some consolidation is what we could be watching out for from Reliance Infra on the technical front. Next query for today, LR Gopal Krishnan is writing to us from Kerala, holding 500 shares of Chola Mandalam Investment and Financials at a price of 1,518 rupees. They're making a profit on this one right now. And he's asking if he should hold the shares for 1 more year or book out the profits he's making. Your view, Parthiv, on Chola?
Yes, I would suggest that the investors' appetite not only hold on for the next 1 year, but also for the next 3-5 years. This has been one of the finest NBFCs in terms of wealth creation for the shareholders. The reason being that, how the management has grown the book, how they managed the asset liability, and more importantly, if you see even the recent quarter where I think it was a little challenging because the CV segment was not firing on all cylinders. I think they've disbursed, loans at almost 26,000 crore, which is a 7% growth. And also overall FY25, they've grown the asset under management of almost 25%. They have also guided for similar growth rate over the next couple of years. And I think if you look at the internals in terms of the ROA, it is one of the industry best at 3.6%. The ROAs at 22% are one of the industry leading. And most importantly, I think the cost of fund for this company always tends to remain low because of the higher credit rating that it deserves. And all the verticals, whether it is the vehicle financing, LAP, the home financing, SME, I think they've never seen any major problems in terms of the asset quality. So very well-run company, and we certainly like it and would suggest for a 3+ year view.
Okay, that's a view coming in on the fundamentals, but on the technicals, what's your view coming in, Ruchit? Is this something that interests you? Last 6 months, we've seen it move up from around 1,200 levels to 1,600 today. So what should they be doing?
So I think the trend still remains positive, and we can clearly see that in this last leg of the downtrend, which we saw in the markets in the month of March until mid-April, there were pockets which were making newer lows, but Chola Mandalam had formed its bottom of the corrective phase in the month of January itself, and since then it has been making that high top high bottom structure. So I think when the markets were correcting, there was a relative outperformance that was seen in the stock, and that outperformance is still getting continued. In any declines, the stock is not breaking its crucial support. So I think overall trend remains positive. Maybe a slow and gradual up move, but yes, NBFC as a space looks quite positive for next couple of years time frame. And within this, Chola Mandalam could continue its gradual up move. So I would recommend to continue to hold on the positions.
Okay, continue to hold is what the view is coming in on the technical front for Chola Mandalam Investment and Finance. But on that note, we're going to step into a very short break. And as we step into the break, here's some good news coming in for our viewers. India's business news leader is now a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC TV18 app now from the Apple Store or the Google Play Store, or you can just scan the QR code on your screens. Welcome back to your stocks on CNBC TV18. We still have with us Ruchit Jain as well as Parthiv Shah to solve all your stock-related queries. Let's move on to the next query for today. We have Raghavendra Rao, who's writing to us from Hyderabad. He bought 160 shares of BSE at a price of 465 rupees per share 3 years ago. Today trading at 7,427 rupees. He wants to know, he's a long-term investor and wants to know if he should continue to hold it for 3 more years. Parthiv, your view coming in for BSE, right? This capital market play, we've seen all these stocks run up, and BSE has had a wonderful run up in just 3 years. From that 400 level he's bought today, it's at 7,000. Do you think there's more room for upside and continue to hold this?
What a brilliant run for the investor. And whenever the investors made such multi-bagger returns, I'm always tempted to suggest that no harm removing your principal, and enjoy the free money that is invested. And obviously, I think it has made very, very good returns over the last 3-4 years. And what we like about BSE is that they have really garnered very good market share. And quarter on quarter, if we see the transactional income, I think that has been going up. And more importantly, I think it's also attributed to the fact that one of its unlisted peer, which is National Stock Exchange, has also gotten re-rated in the unlisted market. And as per the last trades that we had heard, I think it's almost quoting at a 4 lakh crore sort of a market cap. So BSE had a lot of catch-up to be played, and they've done extremely well in the last 2 years. And I think the consensus chatter is also that whenever NSE were to come out with an IPO, it will get listed on BSE, and that will also drive a lot of institutional movement and activity on BSE. Same is the case with NSDL. If NSDL were to come up with an IPO, which is in the pipeline, that would get listed on BSE. So I think a lot of positive momentum ahead. No doubt, the current trail valuations of BSE are extremely expensive. So market will probably try and observe the next few quarters how it pans out. But I think the investor can stay put in such investments.
Okay, can stay invested. Yes, you can always book out your capital, enjoy that, and enjoy the free money that's coming in as well. That's also what Parthiv highlighted, and there's no harm doing that. But Ruchit, your view coming in on the technicals for BSE. I mean, there's no way for me to say percent. Doesn't make sense. We all know the run-up that is there. So how much more? Are you still expecting an upside in the near term?
There is no doubt about the trend for the stock that within the entire capital market segment, this has been the outperformer over last few months. So still the support base is shifting higher now. I think 6,400, 6,500 has become a new support base for the stock. So I think the best way to ride such trend is to keep trailing stop losses method. And in case still the stock is holding above that 6,400 mark, I don't think you need to worry much, and rather than looking at how much upside could be there, since its time frame is more of a 2 to 3 year time frame, even from current juncture, I think keep a trailing stop loss and continue to enjoy this trend.
Okay, keep a stop loss, enjoy your uptrend as well, that is there. So yes, continue to hold the stock. That's the view coming in on BSE. Let's move on to the next query. Rahul Taneja is writing to us from Mumbai. He's holding 300 shares of Yes Bank. This is at a price of 20 rupees per share. Wants to know if he should remain invested in the stock or switch to something else. Your view on Yes Bank, Parthiv?
I think recently the fund infusion by the Japanese bank, I think certainly lifted up the spirits at Yes Bank. No doubt, I think it will take some time for this bank to show very good ROA, ROE numbers. But the levels at which the investors entered, I don't see a reason why he will lose a lot of capital from there. It's a turnaround story. The bank is doing reasonably well. And more importantly, with such fund infusion, I think it's an initial stake that they've taken. And going ahead, if they were to infuse further capital and increase their stake, I think that will certainly help and give a strong backing in terms of with the governance standards also at Yes Bank. So I would suggest a hold. It's a contra view, no doubt. There are other very good banks available in the market, but the rate at which the investors entered, I think, makes me feel that one can stay put here for the next 2-3 years.
Okay, keep an eye out on a Yes Bank over there on the fundamentals, but on the technicals, your view, Ruchit?
So we have seen a pullback move supported by good volumes over these news flows in last few days, and the stock has even surpassed its 200 day after a long period of time. So I think as of now, one can continue to hold the long positions, but the follow-up move would be very important to see whether, after this news with up move, whether follow-up buying is there later or there or not. So around maybe 23 to 24 would be the resistance zone as per the recent historical data. So keep holding at current levels, but take a regular review on the stock, maybe around 23, 24 would be a good phase to take review again.
Okay, surely keep an eye out on those levels over there for Yes Bank. Take a review again at 23-24 of what's happening over there and where it could maybe be heading from there on. Let's move on to the next query. This is from Ginu George, who's writing to us from Kerala. He is holding 3,000 shares of Mazagon Dock. Price is 220 rupees per share. Wants to know the strategy moving forward and if he should continue to hold or book profits. Parthiv, this is one of those other cases where we're seeing, such a good amount of profits. We've seen the run-up coming in for these stocks in the last few years as well. Mazagon Dock in those shipbuilder defense side has done absolutely well. So what should one be doing now?
Yes, I think still a performance for the investor. And again, a similar answer, I would say rather take back your capital. And the management of Mazagon Dock in their con call, they do acknowledge the fact that the business they're into requires very, very long gestation period. They're sitting at almost 34,000 crore worth of order book. And I won't be surprised over the next 5 years, this as a company would be managing order book of upwards of 1 lakh crore because the type of order they get, it might be lumpy quarter on quarter, but once they're eligible technically for a lot of orders in the pipeline where they hardly have any competition, I think they tend to really see a swelling order book. And especially, I think the government's data in terms of, the defense ministries want, more uptake of orders in the submarine segment and also in the shipbuilding segment where the government wants to reduce the foreign dependency. I think companies like Mazagon Dock definitely tend to do well. But yes, I think recently the stock has run up a lot. It's a very low float because most of it is owned by the government, almost 84% owned by the government. So they might come back into the market with some supply to reduce the stake to the statutory level of 75%. But on any declines, I think this is an interesting bet and hold on to the position.
Okay, and Ruchit, your view for Mazagon Dock, technicals, what's the story? Near term, are you still expecting some bit of an up move or should we watch out for some correction consolidation?
So we spoke about a good uptrend in most of the defense stocks which we have seen recently, and I think Mazagon Dock has been one of the outperformer within this entire space, where the price moves have been supported by good volumes and do not see any kind of volume-based selling coming in the stock. So I think overall we could see a continuation of the uptrend even in the short term. So the price-wise downside seems to be very limited from here on. So I think this is a good stock to continue to hold on and ride this trend.
Okay. You can continue to hold and look to ride this trend. That's the view coming in from Mazagon Dock. But Ruchit as well as Parthiv, thank you so much, for joining in with us as always, helping our viewers solve their stock-related queries as well. So thank you so much for joining in with us on the show. And viewers, thank you so much for sending us your queries. But remember, you can always send us your queries and email us the queries on the ID that will be flashing on the screens as well. But with that, we'll wind down this edition of Your Stocks. Thank you so much for tuning in. Up next, your closing bell.